Hey everyone, hope everything is going well. All right. Hope you have had a nice new year, and hopefully 2025 is going to be a great year for all of you. And I wanted to look at some more graphs, and I think this is what the focus of this channel is going to be in the next year. And it's going to be looking at trends, looking at M2, looking at um, versus the S&P over longer time frames. But I'm going to be looking at the global M2. All right. And this is wild. And I came up with calculations. Sure, it's not going to be, to the exact penny. I'm looking at data online. I'm trying to put it together, convert it to base. So we're just looking at, you know, I wouldn't say a guesstimate, but I'm trying to put the data best that I can. And I'm not selling this for a newsletter. So, okay. And don't rely this on based on investing. This is just my own thoughts. I like thinking out loud. And just a few things also. When I look at some of the data, sometimes they release data at different times, these countries. And I'm looking at mainly four: the United States, Japan, China, and then the Eurozone, so multiple countries. So four power players that consist of a big money supply. I'm not looking at everything. That's just too time consuming. And the big boys are the United States and also China. Let's look at global M2 based on my calculations. And if you look at here in the orange is the S&P. Maybe I'm going to enlarge this so you can see a little bit better. You expand this on your YouTube or on your computer screen or your phone, wherever you're watching. And you can see that, okay, it's not going hand in hand with the M2, but it's very similar. Global M2. Okay. M2 over here is in blue. We're looking at the past 5 years. Now, I looked at it in the last year, but this is the last 5 years. I want to look at data. It's very tough looking at some of this data because I didn't take notes. I wish I did. The Chinese data is hard to get, and the Japanese data is very challenging to get. And then you have to convert it to base. And then some of the numbers that I see online don't match mine. So that's why I'm like, okay, do they have the right amount? Because I'm converting it, based on the base currency from Japanese yen to US dollars. So that's something I'm going to have to look at in the long run, but I just put it together for now. It is time consuming, but I do have skills in Excel, which could accelerate the process. There's manual, and I could manual work, and also there's work where it's not manual. So my Excel skills come into handy. But look at this. S&P, for the most part, has been tracking global M2. You see this, 2020, we saw the rise in M2, right? And this data here is what, 1 2022. And this is what, I think this is what, March 1st. So pretty much they're going in similar directions. And then you could see at global M2 bottomed out 11/1 2022. S&P bottomed out sometime in October. I mean, there are two bottoms pretty much in October and in the summer. So that is very, very interesting. Once this bottomed out, once M2 started to go up, and global M2 was a little above 80 trillion pre-pandemic. M2, global M2 was like 67 trillion. And I'm looking at these four countries. Okay. So people will be like, your numbers aren't accurate. Okay. I've already said that from the get-go. But look, these big four, this, in my opinion, is very, very, very important. While you see people arguing online these days on Twitter, it's becoming like really negative, and things are going to get a lot tougher. This is what I want to be focused on rather than, the psyops going on, everyone fighting amongst each other because things are going to get tough and we're going to have to figure things out there. Right. And now it's saying that like M2, global M2 is like close to what, 90 trillion as of like last month and S&P meeting all-time highs. So that's where we're at. Once again, just a guesstimate. But it tells you what's going on. One thing I did want to note is that global M2, let's move this to the side. The Chinese M2 started to go down. I had mentioned that in the other video. Now let's look at this over here. This is Bitcoin, global M2 and Bitcoin. Now, it's not the same type of relationship out there, but M2 was, like I said, 67 trillion pre-pandemic, and where we're at right now, 90 trillion. And Bitcoin, you could see at its low was like what, 3,000, whatever the hell it was, and now we're at 90,000. And we're seeing once again China M2 slightly went down. Okay. And I have the data here. And let's take a look at this thing. Let me try to look at the data here. And so you could see what's going on. Country, I want to filter for China. Like, so anyone could put this data together. It's just a matter of time, you know. And I get it, it's kind of tough with people's schedule, work, life, balance, family, but if you're an investor in the market, have thousands, hundreds of thousands of dollars at play, thousands of dollars, whatever amount you have, options trader, you need to know a little bit of fundamental analysis. That's just my opinion. Everyone talks about technicals. I follow technicals. I follow JC Peretz. I pay good money for his subscription. Okay. But I want to look at fundamentals. I use him, not use, I have subscribed to that service because I want a different opinion. Now, I want to look at fundamentals because I am hugely biased to fundamental analysis. And ultimately, you see this over here, $43 trillion. It went down from China. Base currency, right? 44 trillion to 43.943. Now, if this is on its way down, it continues, that is a red flag because China has the most global, it contributes the most global M2 out there, percentage wise, like 40%. Okay. I want to show you, this is quite interesting because it's mainly China that you saw this. Okay. So you go to M2, right? It topped out like in March of 2022, 39.588 trillion. And then where did it bottom out? It bottomed out at November of 2022. That's when the stock market bottomed. Is that just merely a coincidence or is there something to it? Because I always believe that, M2 has a contribution to our system, right? Everyone focuses on the US, but then my relative told me, hey, look, you gotta um, look at global because even if you're one of those that doesn't like the Chinese or what, not Chinese people, but like what their government does, well, you got to throw that bias out the window. You got to look at how much money they are injecting into the system. And look at the United States, the M2. M2, people look at this very closely, very religiously, but this is when it topped out, uh, March of 2022, about, or you could look at it April, okay? USD equivalent. So it's 21.73 trillion. We're not even there yet. And the stock market's making all-time highs. In my opinion, the liquidity has come from China. It has come from the reverse repo facility at the Federal Reserve. Like, I see M2 is increasing, but it's not at the level where it was a couple of years ago. And what's going to happen? I mean, we could look at a graph of China, right? Go back to this over here. Okay. Like, look at this. If this goes down, I believe that this is bearish for the stock market. And a lot of people have, their views, just a US centric in terms of analyzing markets. And I'm like, no, man, you got to look at China. They are the biggest guys out there. Now, I'm going to look at a longer time frame of money supply. And China, like, it's just manual work and it takes a long time. And I have to help my wife's business out. I'm a job, you know, I have to have like work-life balance. So when I get the time, I'm going to put this together. But look, interest rates, the 10-year bond yields like 1.59%. What's that telling you? Why are interest rates going down in China? Okay. And just look at the relationship between money supply and interest rate. So if interest rates are lower at 1.59, how low can it go? Ludicrous song. How low can you go? Okay, you got to increase the money supply, but you're tapping out, in my opinion. And then the thing is, look, this money supply goes down while interest rates go down in China. And China is the one, which sounds insane. China is the one lifting the whole worldwide liquidity out there. I'm not looking at credit. I could look at credit too. I follow the Austrian School of Economics. Inflation is because of the increase in money supply and credit. Okay, I'm looking at money supply. What would be the critique of what I'm doing right now is I'm not looking at total credit in the system. Now I have to figure out, okay, what's a good way of looking at total credit? Guys, China continues to go down. While we may see stocks rip, I have some stocks long for China right now, but I think it's just going to be a trading momentum play. I don't think it's a long-term play unless China continues to increase money supply, right? The game is increase money supply. If you can't increase money supply, stock market crashes. There's more evidence to what I was saying earlier on, but I think I'm seeing it in the data right now if this continues to go down money supply wise. Anyways, let me know your thoughts, everyone. I'll talk to you later. See ya. Happy New Year once again.